watching famous Dave on YouTube.
Good morning and welcome back to the Short Vol Show Live, broadcasting to you live from Cape Cod, home of the Pilgrims. And today we are going to take a look at GameStop and AMC as we come into GameStop earnings, which are tomorrow afternoon. Today is the 7th of June, and tomorrow will be the 8th of June. And earnings, in a sense, don't matter as much in this situation as they might in some other situations to deal with equities. And the reason I say that is just that the hype and let's say the typical trader who owns GameStop here is a little different from the person that we usually would be trying to predict coming into an earnings situation. And a lot of this is due to the fact that there are a lot of new traders that are trading this issue. I was listening to some statistics about Robinhood and also about options, and I heard somewhere that about 70% or more of the open interest in options in GameStop is traders who've been trading less than 6 months. So you've got this really different dynamic. And it's interesting because I know a lot of people disagree with what I have to say about GameStop, and but that's fine. You know, I would prefer to give my opinion and have people disagree with it and not watch the channel or turn me off or whatever than to just come out and say what I think people want to hear, because what is the value of me coming online as an experienced trader if I'm just going to regurgitate what I think people want to hear? No, the value of me coming on is to hear a viewpoint of somebody who has a unique viewpoint, or at least a different viewpoint than other people online. Just to give you, a brief background of my sort of bona fides or whatever. I was an options market maker at the CBOE from roughly 1995 or 1994 until 2002, something like that. And so I was trained to make markets in equities, and part of the reputation of market makers and the ire and hatred of market makers by retail, part of that is justified. We were trained to make money, and the only way to make money in the market is to take it from somebody else. But if you think to yourself, oh, market makers are evil, hedge funds are evil, what you're trying to do is not that much different than what everybody else is trying to do, right? If you're a retail trader, you're trying to make money, and maybe it gets seen as trying to make money by being long an equity is somehow more noble than trying to make money being short an equity. I think the other thing that really has given market makers and maybe hedge funds a bad name is the perception that, it's not a level playing field, that they have certain advantages over the retail public. And certainly when I was a trader in the pit, that was true. We had a certain edge. And, part of the advantage was that the markets were generally wide. So the difference between the bid and the offer of an option or the stock was something that was in a market maker's favor, right? Because when you come in to make a trade, if you pay the offer, you're having to give up a little bit of money to put a trade on, and when you get out of the trade, you're having to give up a little bit of money to take that trade off. So in a sense, back in the day when a market maker could just sit there and put up a wide market and only trade when someone actually went ahead and paid the offer or went ahead and sold something on the bid, if you just sat there all day and responded to the trades that came in by buying stuff on your bid and selling it on your offer and hedging it right away, then you automatically kind of made money and you had a little advantage over everybody else. However, anybody who's been trading for any length of time, even for just a few months these days, knows that you don't have to pay the offer to buy an option, and you don't have to sell on the bid to sell an option. 90% of what happens in between the markets, right? So if I were to, just to give you an example here, if we do go to an option screen, and markets are still not open, so these might be a little artificially wide, but whatever, just to make the point here. If I was to look at these, the 260 calls here, the market is 49.40 bid at 52.35, right? So that's a pretty wide market, 3 points wide. But if you were to try to trade on this market, you could put something in at the midpoint, or maybe 10 cents better than the midpoint if you're trying to buy something, and you'd likely get filled. The trade would occur. Back in the day, at being in the pit, we were, a lot of times when there were single listed stocks, we were the only game in town. So if you put something mid-market, nobody's going to trade with you. You're going to have to pay the offer or hit the bid, right? And we were taught how to make sure that there wasn't some person in the trading pit who was going to try to undercut everybody else and trade stuff in the middle of the markets. If someone did that, there was sort of a retribution type thing. So, way back when, it was kind of a cartel where people, you had to really pay to play. If you wanted to make a trade, you were going to have to pay the offer or hit the bid. That's no longer the case, right? So that's one huge advantage that market makers had at one point, but they don't have anymore. Now, there's always the case made that hedge funds have insider information, and I don't know if any of you have seen the show Billions, but a lot of hedge funds work very hard to get good information, and certainly somebody that has a lot of more money in resources, somebody who can actually go to the companies and get access to the company officers and whatnot, is going to have more information than somebody who's just sitting at home, surfing Reddit, right? And thus, yes, the bigger players have access to more information than the smaller people. But the narrative around these issues that the public is long them and hedge funds are short them is really oversimplified, I would say. But let's get kind of back out of the broad to the more specific here. We do have GameStop earnings coming in soon, and let's take a look at the stock right here. And GameStop and AMC have been kind of trading in concert for some time now. By that I mean they kind of follow each other, right? So if I were to take GameStop, this is a one-day chart, and I go under, right now I'm using Think or Swim. Let me see if I can actually move this down just slightly so that you can see what I'm doing here. All right, so I'm in Think or Swim. I'm going to go up to Studies, and I'm going to go to Add Study, and I'm going to go down here and select Compare, and I'm going to select Custom Symbol. So what I'm going to do here is I'm going to put a chart of AMC over the chart of GameStop, and you can see here AMC in the purple, GameStop in the multicolor, and you can see they are trending with each other. When one goes up, the other goes up. It's not exact, but it's pretty close, right? So this is something that's important to be aware of, right? Because AMC starts moving higher, well, it's more than likely that GameStop's going to move higher too. And in fact, we've seen that so far today. Coming in this morning, I looked and AMC closed 47.91. Earlier today, AMC was up About a point. It was trading like 48, 49, even something like that. And GameStop was up about 2 points. Now AMC up 2 points and GameStop up 4 points. So they're trading in concert with each other. It will be interesting to see if this continues into earnings. However, if we move back a couple days, we'll see that AMC made a big move last week. And yes, GameStop went up at times, but not to the extent that AMC did. AMC was up 100% one day last week, and GameStop was up, I think, at one point 15 or 20%, but it's different than 100%, right? So if we go to a 20-day chart here and we compare them, you can see it's not, they're diverging a little bit. Now, right here we have AMC overlaid on GameStop. Excuse me. If we were to do it the opposite way, it would look a little bit different. But you can see AMC really making a really big move here. GameStop kind of going up in concert with it, but not as much. And there's a little bit of a feeling that GameStop is kind of sort of running out of steam. And you could say that compared with AMC, but still, GameStop made a huge up move, right? Just since May, we've really seen the move from the 140s it got up to 294 last week, right? And there has been a lot of hype about this issue. Now, the usual rules haven't applied in a sense because, yes, there's been positive news about the company, but certainly not something where you expect the stock to double or triple on positive news. And a lot of this has been fueled by excitement and hype. And to the extent that some people have pointed to this as saying, if the market makes a big down move, this kind of over exuberance. Remember in the time of Greenspan, there was a period where they talked about irrational exuberance. This goes back several years when everybody seemed to just want to buy tech stocks no matter what. And things got kind of blown out of proportion. And then we had, the whole thing with the Big Short, where you had people insuring mortgages that a bunch of people wrote bad mortgages and they insured those, and the insurance ended up getting paid because all these mortgages failed. Well, people are pointing to these moves in AMC and GameStop as another example of the market being kind of overblown. If we look at AMC, AMC essentially runs theaters, and theaters are something that is kind of going out of style, right? Most people consume their video media on streaming services now. Netflix is huge, obviously. There's tons of streaming services: Hulu, Apple, Amazon, et cetera, et cetera, et cetera. And certainly, movie theaters are recovering a little bit since COVID is sort of getting under control. However, does that really mean that this company should go from being worth, $10 to $80? It seems a little overblown. However, when stuff starts trending in a direction, figuring out when it's going to move the other way, I certainly have a feeling that at some point this stuff's going to move the other way, but being able to time that right, stuff can go up a lot longer than you still have money in your account, something which I've proven to some extent this year, having lost a significant amount being short GameStop. However, I'm determined to stay short this until it goes back down. So we'll see how long that takes, and we'll see how much money that takes. But currently, my position is that I am long the July 200-190 put spread, right? So there's only 39 days to go, so a little over a month to go. Right now we're trading 248. I put the position on when we were trading 260. And so looking for a pullback here below 200. And essentially the position is if we get the pullback below 200 and within 40 days, GameStop is below 190, then my account will double. And pretty aggressive trade. I certainly would not leave it on towards expiration. If things don't start to move lower pretty soon after this earnings, then I'll roll out to something else. But that's kind of where I am. I'd encourage you to check out the Options Insider Radio Network. I appeared on there last week under Volatility Views. Let's see if we can pull up that show for you to check out, just so that you can go look at it on your own time if you wish. So if we pull up here, Options Insider. And Volatility Views. All right, this is the one from last Friday. I was on the one right before that. But anyways, check out Options Insider. There's interesting stuff. I don't want to play the whole thing for you because you can go and watch it yourself. So if we go under Options Insider and under Volatility Views, you can look up. This is the one I was on. VIX is cool again. Or I'm sorry, UVXY is cool again. So check that one out. Anyway, let's take a quick look at our VIX term structure as we're moving forward here. We have gotten a pop in volatility. When I was on the show 2 weeks ago, we were right around 1650, so we're still kind of in that same area. However, notice once again a high level of contango here. It's showing 11.99. We have 8 days till expiration. Then we can see moving out, the curve continues to move higher. So this is what we would consider just a very healthy VIX term structure, kind of alluding to the fact that the market seems pretty healthy, and at least as far as us being in kind of a lower volatility regime than we have been recently. And but this 11.99 is going to serve to really knock UVXY lower. Even if volatility doesn't move, it's going to continue to lock UVXY and VXX lower. Indeed, if we take a look at UVXY chart, and we don't really need to compare that to AMC anymore, so let's get rid of that. So I'm going to go to remove all studies. And we can just see, yes, the continued down move. Now, this is, of course, adjusted for the split, which happened a week ago, a little bit over a week ago with UVXY. However, continues to move lower on the heels of that really heavy contango. AMC is pretty far off the high, right? We had this huge up move, and the company... One thing I do want to talk about and kind of make the case to you for the bull side for these products. Now, I know I'm short, and I've made the case for being short a lot. There is I wouldn't say that it justifies these levels, but it is a positive and a smart thing, which AMC has done, and I predict that we will see this more from GME. Now, both GME and AMC have floated more stock to raise money, right? Excuse me. And AMC did so, I think, a week ago, something like that, and raised like $1 billion, right? And GME raised a whole bunch of money and canceled out their debt. Now, this is a big deal for the companies. When we're in this environment, which is kind of a unique environment where no matter what news comes out, people continue to buy these stocks. Selling more shares and raising capital is incredibly helpful for these companies. I mean, sometimes when we're looking at the stock market, we kind of lose sight of how to kind of compare this to like the reality of life. And the reality of life is if you're a company and you're struggling, which both these companies to some extent have been struggling, if you can raise a bunch of capital, that is a real lifeline for you. Now, no company can exist losing money forever, and regardless of how much capital you raise, but when you've got a situation where a company's struggling and all of a sudden their stock moves way higher, being able to monetize that and take get some cash out of that is a huge deal. Now AMC will be able to, they can come up with wacky ideas of how to either change their company or how to gain market share in the, as we said before, falling apart kind of theater industry. And they have the money to do it now. $1 billion is a lot of cash, and there's a lot of things you can do with that. GME, same thing. They've been able to cancel out their debt, and I would not be surprised at all if they had another offering, and I wouldn't be surprised if they announced it as soon as possible, because the stock, remember, is a lot higher. The first time GME sold more shares, we did the math on that in a past video, and the average price was somewhere around $160 a share. Well, everybody who bought shares in that offering, and there's no really way to know if you bought those shares that were in the offering or not, because there's not a lot of transparency as to exactly who they used to sell the shares and if those are the shares you bought. And it really doesn't matter specifically if those are the shares you bought, but if you bought shares around that 160 level, you've made money on those shares, because we're almost $100 higher than that point right now. And this is going to allow GME to, once again, no company can exist losing money forever, but this is going to buy GME a lot of time and the ability to try stuff and have it not work out, to hire more talent, and to use creativity to try to redefine themselves. And certainly it is a huge thing that they were able to raise money, and it's a huge thing that AMC was able to raise money. Now, usually, if you announce, in a quote-unquote normal company, if you announce a big stock sale, the stock just completely tanks. And in a sense, AMC tanks somewhat, but even with it tanking, if I get out of the way for a second, the stock thing was announced last week sometime, and even, I think it was announced on this day right here, which would be the 2nd. And even with it tanking, it's still up higher than it was a week before. So this works great for AMC. Usually you can't get away with this kind of thing, but the people who are running this company have been smart enough to realize that this environment that Wall Street Bets has really created of people buying stuff no matter what has created an opportunity for them to float more shares without really being punished that much for it. And once again, I wouldn't be surprised if GameStop did a little bit more of that. But all of that taken into account, and even their money raising and everything, my take on it is that they're still way overvalued. We'll see if I'm right or not. You may disagree, and please, that's fine. We're all able to have our own opinion, and the beauty of trading is you can put your money where your mouth is, and if you're right, you make money. If you're wrong, you lose money, and there you go. So I will stay short coming into earnings. What's up, Brian? Nice to see you. And we will see what happens on earnings. I believe they're tomorrow after the close. I'm going to let you go for the opening today. Have a fabulous day trading. And we will catch you next time. Till then, this is Dave from Cape Cod, Massachusetts, home of the Pilgrims, saying farewell and have a great day.
You're watching Famous Dave.